Anyway, back to our markets and what have we got to start us off this week? Well, I'll tell you what we've got. We've got a big red candle. So I'm going to have a look at a few markets in here before I go and do this scan. Now, this is the weekly chart, so you can see the resistance back here, the support. I've been talking about it quite a bit. I talked about it last week when we came up into this point, pushed into an uptrend, and I sort of compared it to over here. What I'm seeing, look, if this is to continue playing out as it did over here, which is the comparison that I made, so let's keep drawing from that. If it's to continue to follow the playbook of what happened over here, long consolidation, higher low, fail, so on and so forth, then we've had this part, I think. Yeah. This part here, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6. So we've had those. We've had that period of back down. The thing is, the difference right now, though, is that over here in that 5-day, 6-day period, we broke that higher low to take us out of that uptrend. We haven't yet done that. Of course, it was a very deep higher low, very large push to get to higher high. So the volatility, I suppose, is a little bit larger over here. I wouldn't be surprised at all to see this continue to play out. To see this continue to play out similar to here, and for us to see another significant leg down. And I'm only saying that because that's the way it's starting to set up. This is our first real relief rally, and it wasn't a huge one, but we did get one. We got this 10.4% candle. We pushed into the green last week. We didn't get in. Well, we haven't thus far got very deep into the cradle zone, but we got far enough in to be, suggesting we've respected it. Now we've got this bearish candle. If we see this playing out, a break of the low of this candle could really, genuinely see us heading down into the 50s. Let's just have a look. Again, this is just comparative. It's not going to happen exactly like this. If it does, well, it'll just be basically luck. I'm going to go from the break of the low of that weekly candle, which is this one here, yeah, to the low. That was let's call it a 30% drop because that's what it is. Let's say that this plays out, we moved back in, took a while, in 30% from the break of the low of that bearish candle. It was in the cradle zone, similar to what we've got right here. If we get 30% from here, what does that take us to? That takes us to about 46,000. Oh my goodness. Wouldn't I love to see it? Yes. And look, to suggest that couldn't happen is kind of, I think, very naive. One moment. I'm going to try this coffee out. Yeah, to suggest that can't happen. Morning, Cardsy. To suggest that couldn't happen would be insanely naive. Now, one of the things that we obviously know we have happening right now is a war. It's a very yucky war. And here in Australia, look, we're not under the threat, so perspective's important. My family's not being attacked by missiles and whatnot, which is, thank goodness for that. I'm very grateful for that. We're just getting it attacked at the Bowser for the time being, right? So it's a financial ho-hum for us. But the reality is that when things become more difficult and expensive, there's less capital available for investing. Bitcoin and cryptocurrency, well, it's a highly risky asset, and it tends to pump well when liquidity comes into the market. Now, possibly we'll get some liquidity into the market, but that's not really going to change the fact that there's a war going on. The most important, literally the most important commodity on earth is oil. So while oil keeps moving higher, and while the Bowser keeps being higher, and especially in Australia, well, there seems to be zero solution. Because we shut down our refineries, but anyway, it is what it is. Then globally, there is a lot of uncertainty, and not just uncertainty, there seems to be a lot more pointed towards bad shit, right? Tough. Things are getting tough, right? So to think that Bitcoin couldn't get down to 46,000, I think that is incredibly naive, okay? I think we really do have a shot at least getting to 50, and I tell you what, mate, if I can get 50, I will be buying. I'll be buying. I'll be backing the truck up. Put it that way. I'll be buying. I don't know, at least 5 or 6 Bitcoin at that level, and I'll keep some cash on the sidelines just in case we go lower. But yeah, look, it's that's that's the extent of what I'll be looking to buy if we get to 50,000. I'd love to see it. So we really do have this weekly bearish candle. It's playing out very similarly to what we saw over here, as I discussed last week. And I do see volatility being fairly consistent. We'll probably see fairly consistent volatility. I think, we've got Donald Trump, who's kind of, I know it's Israel and the US, but Donald Trump seems to be the one who talks the most. He flip-flops the most. And with the flip-floppy leader, the markets will tend to flippy-floppy with the flippy-floppy leader. Okay, so do expect there to be a lot more volatility throughout this week. Right now, what I've got on this 1 hour chart is I do have a bearish candle in the right spot, but I've got divergence. So there's not going to be any trade immediately available to me here on Bitcoin. The 2 hour, the only way that I would trade this, and look, it's been very shallow and it's pullback. It's only just been registering as a pullback on that 2 hour with the 2 candle pullback. The dump. I'd actually like to see this have an extended run lower. To get that downside, so if we get that downside, we would open this trend up a little bit more to be more workable, and probably also on the lowers as well, getting rid of that divergence. And I'm very keen to short. I'm very keen to have the opportunity to short, put it that way, for some of these big crypto market players. Again, I just come back to here, the next significant level, which isn't really a massively significant level, but it is as far as trend goes, and it is as far as there's a region of support through here. Nothing really that significant as far as support goes, but we break down through 65.6. We've broken that daily trend, and we may just end up ranging for a little bit, but I'm going to wait and see how this plays out. Certainly the weekly is pointing towards further downside if we can break the low of last week, which is 67,365. So we'll get rid of that. So that's Bitcoin. Now the ES, which is the S&P 500 futures. This right now, if I had take me back, what would it be? Probably 14, 15 years ago, I'd probably be quite happy right now, because this particular gap, this is the ES gap, is almost filled. It did open, look at what it's done. It opened about 0.6%, because I was there as it opened. It opened 0.6% down and then popped straight back up. Look at this trend. It is a beautiful thing. This is a thing of beauty. Obviously, this gap, pulled in, sell it at the close, you would have banked really good profits. You would have been brave too. But again, just another reminder that these strategies work in any market. What we've got right here is, we'll go back to here to the daily. We've got this playing out more or less how I had suggested way back over here somewhere. And that is that, the saying that I use is when you hold your arms out horizontal to your shoulders for long enough, they become heavy and they do tend to fall. And this is what we've got. The S&P 500 actually looks a little bit tidier. And it looks a lot worse too. Support. We broke down, we retested, and we've pulled back into the cradle zone twice now. Back when we retested the support, resistance, fall. Again here, fall. I had talked of seeing the S&P 500 at least have about a 10% pullback. We're not quite, and that's from the highs. We're not quite there yet. Gets us back into the lower end of this cradle zone. That would be what I would regard as a healthy pullback. Okay. Given that there is war around, we might actually see something more, but I'm not worried about, or I'm not going into that just yet, because for the time being, the pullback I was looking for back into the cradle zone, about 10%, is well and truly happening, and we'll keep an eye on that. That could very quickly bounce if all of a sudden the war stops or a deal is done. That could very quickly bounce. But as it stands, it has played out very, very similar to, pretty much bang on what I was talking about. Coming to crude oil, it opened up above $100. We're in a bit of a consolidation period. Of course, the whole world wants this market to crash unless you're in the oil business. But we wait and see, so that's a bit of pressure there. Gold and silver, two interesting ones here. Have a look at the cradle. Have a look at this trend here on gold. Look at that. What an absolute ripper. Clean pullback cradle. Beautiful. Now, people are being a bit confused at the moment. So the cyclicity is fantastic here on gold. People are a little bit confused out there. Gold's meant to be a safe haven during periods of war. Well, not at the moment. It's now lost a very significant. There was nothing like this volatility over here, but that's some big selling. That is 3 days, 4 days, call it, with the open today. 11%. That is not quite significant. That is insanely significant. It's pulled back deeper than the cradles. And last week closing down 10%, one of its biggest moves in recent times. I reckon you'd probably be going back an awful long way to find a weekly candle as big as that on gold. Onto the monthly. Well, look at the extension. That monthly is down 15%. It could come all the way back into here, which would possibly represent a bit of fair value again for me on that macro timescale that I do look to trade from. So gold and silver, also highly volatile. So both of these two doing their thing. And the dollar index, well, this one is, it's kind of my unintentional trade, I suppose. The dollar index, I'm sitting in US dollars right now. So, against the Aussie, you'll see that the Aussie's been fairly strong. It's consolidating. I would suspect that we'll see this come off if we see this break through this resistance here. Typically when it gets through that significant level of 100 or we approach that level, in recent times we've seen a very significant rally and because I've got a fair bit of USDT sitting there, a 5 or 6% rally would actually turn out to be a very profitable trade, dollar terms. So again, just having a bit of a start to the week, looking at the markets across the globe, seeing what we've got. I'm seeing a lot more volatility this week ahead. And now I shall take you across to our list to scan. All right.